It's the old downgrade and price hike. One of my favorite moves of the day or whatever with these analysts. But anyway.
Well, it's like they're just rooting against him. Yet a lot of people are still rooting against him on Twitter, which is a little bit odd, Walter. But that said, does he care? Does he care that it almost feels like a lot of high-level people are rooting for him to fail?
Even though we set a record for EVs in the second quarter, EV demand is not keeping up with production.
I get the EV story. I know everybody's excited about it. They all want to make comparisons to what Tesla's doing, what Ford is doing. But the story for this quarter for General Motors is they sold a lot more trucks.
You're raising your guidance for the full year, but the stock is selling off right now. And I think in part because people are wondering about the additional cost cuts that you guys are putting in place, as well as pullback on capital expenditures, and the question of whether or not you're hitting perhaps a bit of a rough patch over the next year or so as you may be slow to ramp up EVs.
All that and more, so let's get to it. Tesla stock going back and forth whether or not it wants to be red or green today, and your boy felt a little gambly. I put in a 267.50 put ahead of the potential Fed hike. Now I know the market has priced in the 25 basis points coming up, but with the combination of tech earnings, I believe that's where most of the money is going to go. And as you can see, like clockwork, I put in a put or a call, the market goes in the opposite direction. Unless Tesla has a spike, I'm going to let this play out for a couple of days and see how things pan out.
Another story we're watching relates to Tesla. Shares rising in today's trade despite a downgrade on Wall Street. Yahoo Finance's Praz Subramanian is here with the details. Praz, what do you got for us?
It's the old downgrade and price hike. One of my favorite moves of the day or whatever with these analysts. But anyway, yes, exactly. There was downgrade to hold. Patrick Hummel at UBS saying that, you know what, shares are fairly priced here, right? Nice big move up. Q2 numbers, there was a kind of a hit there. Concerns about margins, but they delivered on Q2 deliveries, and the bull case is possibly intact through 2024 as part of one of the reasoning. So he talks about how, yes, strong demand is reflected in the share price. Q2 results validated the pricing strategy. They expect strong execution in 2024. Upside risk is limited here, so you're not going to see much of a pop here, but you're not going to see much of a drop either. And also the bottom line, the risk reward looks balanced. So that's the case with the hold, but also the price hike to 270. Talking about how they have more visibility into long-term growth. That's why they're sort of upping the price target to 270, but making it a hold.
No surprise here, UBS ups their price target to 270 after waiting to see how far Tesla would tumble after their Q2 earnings. They're no different than anybody else, chasing the stock price, throwing darts at the board, wondering if Tesla's going to go higher or lower, leaving me to believe that they haven't done the math, nor modeled out best or worst case scenarios and the likelihood of those things occurring. But my bear case remains the same. I still have a 364 fair value estimate for the company.
But does even Musk have the bandwidth to execute this vision with everything else he has going on? Joining us now is Walter Isaacson, the upcoming author of the biography Elon Musk, also a CBC contributor and a writer. Every book he writes, you should read. Walter Isaacson, thank you very much for joining us, sir. You probably know.
Thank you, Brian. No. That was nice.
Well, my honor. Listen, I have read everything you've done. You probably know Elon Musk now as well or better than any non-family member or longtime friend. What do you think he's doing here?
You know, he's always wanted to have what he called X.com when he founded it in 1999. Basically, the combination of a financial services, social media, something that would put together Baidu and TikTok and YouTube. It would be a platform for creators. And he's also always been infatuated with the letter X. You mentioned that in your introduction, but he even calls his young kid X, and that's part of a name that he gave his young son. It's sort of like a druid password, but the first letter is X, and that's what they call him.
And he appears on every map. Walter, listen, I get the concept. It's kind of like, and for our viewers that don't know, there's a company in China called Weibo, which is kind of like a Twitter, but you can buy stuff on them. You can do a lot more than just sort of, rage tweet about stuff. It feels like that's kind of the model he's going for.
Exactly. Weibo is the exact model, combined with everything from Substack to YouTube. He wants people to be able to create content videos, stories, whatever. He wants it to be a financial platform. One of the things we have now is if you want to get an article from many newspapers, you have to subscribe. And I'm always hitting paywalls. I subscribe to about 12 newspapers, but I'll hit a paywall when I get to, say, the Minneapolis Star-Tribune. I want one article. If you could have a financial services app that gave small payments both to content creators, but also newspapers, anybody who made things, that would actually be transformative to the world of journalism.
It would. I love the idea. You're right. You want to read something from the Minneapolis Star-Tribune. You don't live anywhere near Minneapolis. You're not going to subscribe. You like the article. You hit a button, 99 cents, boom. They get paid.
Steve Jobs figured that out with the records.
Yeah.
That 99 cents, one click.
Same model. It's just bizarre. It hasn't happened yet. That said,
Totally.
all right, Musk was sort of he basically single-handedly built the electric car market in the United States. All right. People loved him forever, sort of a hero on that side of the political spectrum. Then he buys Twitter, right? And he allows some stuff to come out. Hate speech goes up on the rise, whatever it might be. Now people, it's like they're just rooting against him. Yet a lot of people are still rooting against him on Twitter, which is a little bit odd, Walter. But that said, does he care? Does he care that it almost feels like a lot of high-level people are rooting for him to fail?
I think he loves being in the arena. His favorite line from a movie is the end of Gladiator. Are you not entertained? And so I think he kind of relishes the drama. One of the themes in my book is ever since he was a young kid, beaten up in the schoolyards in South Africa, having his head smashed against the concrete steps, his brother Kimball said it made him a drama magnet. He really loved having a storm. And I think I'm from New Orleans, there's certain people who are never more excited than when a hurricane's coming. I started this book right after he moved us into the era of electric vehicles and Tesla sold 1 million cars, right after he created the internet in low Earth orbit with Starlink, and he had rocket ships that could shoot up and then land again. He was the only person, the only entity that get American astronauts into orbit. And it seemed like at the beginning of 2022, everything was going smoothly for him. But as he said, I'm not made for smooth times. And I remember early that year, he was starting to acquire Twitter stock. He just couldn't help himself from wanting a new chapter, a new drama.
Is this not why you're here? The hero's journey is rife with struggle. Elon welcomes the friction. He wants all the smoke. Does some of his best work when faced with the impossible. And it'll be no different with X.com. Oh, you doubt me? I can show you better than I can tell you.
Motors out with its second quarter earnings this morning, reporting an adjusted $191 a share that beat the expectations of $1.85. Revenue beat expectations too, $44.7 billion. We want to break down this report with former Ford president and CEO Mark Fields. Mark is also a CNBC contributor. And Mark, what do you think of the numbers?
Well, this was a very strong quarter for GM. The revenues were up about 25% versus last year. Their pricing held up really well. They beat on the top and bottom lines, and they raised guidance. So the bottom line is the pent-up demand is still there, and customers are still willing to pay for good product. And so it was a very strong quarter for it.
A lot of people are wondering, though, what to make of the new EV brands, how much demand is out there, particularly when we've seen price cuts recently from both Ford and from Tesla. What do you think? What's the feeling you're getting just from where consumers are, whether there are more consumers who will be brought into these, whether they can maintain pricing?
Well, we're literally at, I'd say, a bit of a make or break moment for the industry when it comes to EVs. You got a lot of capacity coming online. You got a lot of new products. For example, GM is launching their their Silverado EV, their Blazer EV, and importantly, their Equinox EV. You're seeing inventories for EVs about double what it is for internal combustion engines. So, even though we set a record for EVs in the second quarter, EV demand is not keeping up with production. And I think the most important launch for EVs right now in the industry is coming up in the second half of this year, which is the Equinox, which is Chevy's second best-selling model competing in the highest volume segment. And they're targeting a $30,000 price range. So you're taking the price issue off the table for consumers around EVs. And so if GM isn't successful in ramping sales of that, not only is GM going to have a problem, but the industry is going to have a problem.
First things first, just because electric vehicles are sitting on dealership lots does not mean demand for EVs is being outstripped by the production. The real problem is the dealership model. Ford, GM, Hyundai, all of their cars have to be sold to a consumer via the dealership, where some sleazy salesman is going to upsell the internal combustion engine variant of that electric vehicle. Oh, the range is garbage. There's no way to charge it. This is cheaper. Why don't you grab a hybrid to get your feet wet in this electric vehicle space? Whereas Rivian, Tesla, they don't have to worry about that. They're selling products that are so compelling that people are willing to line up in droves to acquire that product. Not to mention, they don't have to overcome obstacles like markups from the dealership or some car salesman making them feel insecure about their decision to go electric. But I do agree, this is a make or break moment for Ford and GM. They need to price these vehicles competitively so that they can get their loyal customers to switch from internal combustion engine to the battery electric vehicle model.
It's going to be interesting to see how that product is accepted in the marketplace.
You sound skeptical, and I wonder if that makes you skeptical of these goals to be like an all EV fleet by the year 2030. What do you think of that?
Well, I'm not skeptical about the transition from internal combustion engines to battery-powered vehicles. I'm actually very bullish on it. What I am skeptical about, it's going to happen slower than people expect, because at the end of the day, if you look at history in industries, right? When you think of Netflix, when they went from sending DVDs home to actually streaming them to customers, there was a big issue around, can that company and that industry make that transition? I think they were successful. That the key there is they made lives easier for consumers. And right now with EVs, for the most part, you still have, they're still more expensive than gas-powered vehicles. That's going to be solved by the industry. But secondly, it's the charging infrastructure. And if you're making, at least initially, life more difficult for consumers, they usually take the path of least resistance when it comes to new vehicles and when they're making a big purchase like that. So it's going to happen, but there's a mismatch right now, I think, amongst the industry and analysts around how fast that's going to happen.
The charging infrastructure is not as big as a problem as most people think it is. Most of these legacy OEMs now have access to Tesla's supercharging network. It's even less of a problem. The rate at which consumers adopt battery electric vehicles hinges on two simple principles. One, how fast can quality battery electric vehicles be made? This is the primary limiting factor on battery electric vehicle adoption. Unless I miss my guess, Tesla alone will deliver 2 million battery electric vehicles this year. That'll be a very tiny percentage of the overall vehicle market, and that's the leader in the space. And two is the total addressable market. Being able to price your vehicle so that more of the market can afford it, well, that's game, set, match. If you have the production and your product is better than the internal combustion engine variant. These are the only two factors that might limit battery electric vehicle adoption. All the rest of these concerns will evaporate as technology advances and manufacturers benefit from economies of scale. Lo and behold, there'll be charging infrastructure everywhere, and there will be businesses that gravitate around those places. When you're dealing with exponential curves, everything seems pretty normal at first, but then once it spikes, it'll blow your wig back. Then you'll hear analysts like Mark Fields going, oh, there's no way that we could have anticipated it.
All right, shares of General Motors are in focus after the automaker reported strong revenue and profit beats today and upped its full-year profit forecast for the second time this year. But investors really had their eyes peeled on GM's electric vehicle outlook. The company reaffirming its plans to produce 400,000 EVs through the first half of 2024 and 1 million by the end of 2025. Julie, I get the EV story. I know why everybody's excited about it. They all want to make comparisons to what Tesla's doing, what Ford is doing. But the story for this quarter for General Motors is they sold a lot more trucks at higher prices, a lot more SUVs at higher prices, and people didn't care about those higher prices, those higher price trim levels. They went out and bought this stuff, and here's another company trading at a discount to the broader stock market, putting up another good quarter, and probably still not getting the love that it deserves.
GM had an excellent quarter, but if you happen to go see the Barbie movie, it's kind of like a mini GM commercial. Blazer and the Hummer are all displayed in there, but it's not the internal combustion engine kind. No, GM knows that the future of their business is battery electric vehicles. This short-term sugar of how many internal combustion engines that they sold, how much money they make, it's irrelevant. What really matters is if they can keep their guidance on how many battery electric vehicles that they're able to produce and whether or not they're going to make any money off of them. Every automobile manufacturer needs to be measured against Tesla's success. If you're not producing as many battery electric vehicles as Tesla, you need to be. If your gross automotive margin isn't as high as Tesla's, it needs to be. What are you doing to make sure that you're going to be successful in this next phase of transportation?
So the bottom line is demand. People wanted more trucks. So what then do we make of this continued emphasis on electric vehicles at the same time that they're still selling all these trucks?
Well, if you're still selling gas guzzlers and making a lot of money off it, you could invest in EVs. But just going on to demand, I talked to General Motors CFO Paul Jacobson earlier this morning on the demand in the second quarter they saw, which he says was very strong, and the outlook for the back half of the year.
Our biggest challenge right now is we can't get the vehicles to customers fast enough, and we're working on scaling that pretty quickly. But we've been very consistent about pricing to where our demand is. I think when you change pricing that dramatically, that fast, you create confusion in the customer's minds. And, I don't want to be the person who bought an EV the day before you lowered the price by $10,000. That's not a great way to manage customer expectations. And that's why we've been consistent. We've seen this happening for probably pretty close to a year around EVs. And, while we're ramping up production and fulfilling orders, our customers have told us that we believe these vehicles are fairly priced.
Maybe a little shot of Tesla?
A little shade.
A little spicy?
Shade
A little
there.
spicy. I like the shade, but I like Paul Jacobson.
How much are you making off your battery electric vehicles again? Oh yeah, that's right. There's a negative sign in front of that. Shot at Tesla. And this is why it's so tough to like GM. It's this incumbent hubris that they have that the way that they do business is the only way that you can sell your EVs at a loss despite how much it costs you to produce it. But last I checked, that's not a sustainable business model. And if your plan is to offset your battery electric vehicle losses with your internal combustion engine sales, you're dumber than I thought. GM better get with the program quick, fast, and in a hurry. I don't want to even entertain any bailout situations because my answer is emphatically no. Figure this shit
Comment right there, but I also like the fact he has been now the CFO for several quarters, and he's come out here and delivered every single quarter. He has set expectations. He's not only delivered on them, in most cases, he has delivered above those results. Those are all the things you want to see, like you wrote in your earnings in the morning brief this morning. That is everything you want to see from a CFO of a very big company like GM.
And again, to come back to what they're spending money on, because that's what you want to know as well. So they're still going to be investing, even as they cut costs elsewhere, they're still going to be investing in electric vehicles and are investing in autonomous driving in their cruise unit, right, which lost $611 million in the quarter. So that's something to keep an eye on, of course, how much that continues to take away from the company.
Phil LeBeau joins us now. He's going to dig into the numbers with Mary Barra. Phil.
Thank you, David. Let's bring in Mary Barra from the GM headquarters. Mary, you heard David there. He set it up well. You had monster numbers for the second quarter. You're raising your guidance for the full year. But the stock is selling off right now, and I think in part because people are wondering about the additional cost cuts that you guys are putting in place, as well as pullback on capital expenditures, and the question of whether or not you're hitting perhaps a bit of a rough patch over the next year or so as you may be slow to ramp up EVs. What do you say to that narrative that seems to be circulating a little bit out there?
Well, if you look at our EV ramp up, we said we were going to produce 50,000 in the first half of this year, 100,000 in the second, and then cumulatively to 400,000 by middle of next year. We are still on track to do that. And the reception we're seeing from the products, especially now with the Lyric starting to get into more and more customers' hands, and that'll ramp dramatically between now and the end of the year, as will the Hummer. Nothing has fundamentally changed. We just went back in and looked to see how do we be more cost effective and demonstrate cost discipline across all areas of the business, and how do we really make the capital that we are investing do more. But we still intend to cover 90% of segments in especially EVs. We pretty much do that already today in ICE by 2030. So we're on track to our plan. We're just going to keep executing and keep making sure we earn customers because we've got the right products.
Mary, you guys announced that you're going to be putting in manual battery module assembly stations at a number of your facilities because of a problem with one of your suppliers when it comes to the Ultium battery platform. How much will that slow down the ramp? I know you're targeting 100,000 EVs produced in the second half of this year, which has been your target, but that has to be a headwind.
Well, clearly, we're disappointed that the module assembly, the actual assembly line for that has not been on time, and that is causing us issues. We're doing both automated lines and manual lines, and the manual lines are something that we'll be using in many places, especially as we bring more and more plants up with EV capacity. But we're also bringing automated lines in as well, and frankly, high-speed automated lines. So we're doing both to not only deal with the situation we're in now, but to make sure we stay ahead of module production as we have a ramp on our way to 1 million EVs in North America by 2025.
Mary, good morning. Jim Cramer. Good to see you as always.
Good to see you.
There is a UAW president. His name is Sean Fain. And Sean Fain is using language that I've not heard in 30 years. I think that the recommendation that he has from what he feels his rank and file one is for really kind of a retaliation against multiple years of the UAW working closely with you to be able to make it so everybody wins. What are you going to do? Is the rhetoric just rhetoric, or is there going to be a strike, Mary?
Well, we're doing everything possible, Jim, to make sure we're getting to the table, which discussions have already started with the UAW, that we get to the real issues. And, we want to do the right thing for our employees. If you think about our manufacturing employees specifically, what they've done over the last several years of getting back to our assembly plants quickly, following safety protocols as we move through COVID, and frankly, the strong demand we're seeing for our products. So, they're responding to that as well. We think we can find an agreement that does the right thing for our employees, but also allows GM to remain competitive. And that's what we're going to work on. And, again, we're having those conversations. So in my mind, we can get to something that meets everyone's needs without a strike. Obviously, there's two parties involved, but that's the path that we're on and the mission that we're moving forward with.
Just another advantage that Tesla has over the legacy OEMs. You can see the cost, the obstacle that the UAW presents to these manufacturers. This is not chump change. Now there's a potential strike where you're going to have to shell out even more money to the UAW. Not looking good.
One of the things that is disturbing if you're a shareholder of GM is that UAW leadership was at the White House for meeting to brief senior staff in the position recently at the West Wing. I mean, it's almost as if we have a union president who says, you know what, we agree with Mr. Fain. The unions haven't gotten a good deal here. And yet, Mary, I think that would be hard-pressed to think that the unions don't have the best deal in the country of most blue-collar workers.
Well, we're very proud of the compensation package that we have for our manufacturing employees. We think it is very strong. There's always aspects of it that we can look to improve, and again, while we're maintaining our competitiveness. So we're trying to make sure that all parties involved and people with interest understand where we're at, have the facts. But again, I think we can get to an agreement without a strike, and that's what we're going to work hard to do.
Mary, it's Phil again. On your EV cadence of new models, you've got the Silverado going into production this year, the Chevy Blazer, the Equinox, especially on the lower end of the market. Now you're bringing back the Bolt, which you just announced today. Do you believe that lower end of the market, and I'm talking about sub 40,000 as far as an EV, is that the growth target or the growth area in terms of EV adoption in this country?
Absolutely. And when you put that in hand with charging, because what we need to do is win consumers that only own one vehicle and that are price sensitive. And so by having not only the Equinox, the Chevrolet Equinox EV in that space, as well as the Chevrolet Bolt that is just really strong from a consumer perspective, that gives us the ability to offer some choice in that space at two different price points, but both on the lower end. And then with everything we've done from a charging perspective, allows customers to choose an EV because they can have it as their vehicle for everything, especially with a robust charging network.
When Tesla unveils the next gen vehicle and it's somewhere sub $30,000, it's going to make the Chevy Bolt and Chevy Equinox look bad. I have no idea what Tesla's next generation models look like, but I know they're going to look better than the Bolt. And quite frankly, Tesla will be producing millions more battery electric vehicles than GM will, strike or no strike. Gonna be tough sledding for Mary Barra and GM. They need to be able to produce their vehicles despite all of these production challenges. Walking the tightrope of your internal combustion engine success and your battery electric vehicle struggles will be the hardest thing for any legacy OEM to do. Well, that's all I got for you today. Be easy. Peace.